Hey, what's going on, everyone? Welcome back to another episode here on Let It Grow Investing. I'm Jeff. Let's roll right in with the stock news, get everything covered that we need to know right now. So, another couple days into the government shutdown. Oh boy, what do we make of this one? I mean, it's battle back and forth. We've seen this before. We've seen it play out. I think we're in a little bit of a different situation at this point. In Washington, they say never let a good crisis go to waste. I think we're getting a little bit of that action here as things progress. Trump is trying to use this as kind of a bargaining chip, I think, in a lot of different ways. There's definitely things that he is using to kind of roll forward with his agenda. I got some notes here. Funding is on hold for $18 billion of spending in NYC. So that is something that has been on the chopping block and a Trump problem for quite some time now. So $18 billion is on hold for the New York City. Then we've also got about $8 billion of green deals canceled in blue states. They've been kind of rolling back the spending on EVs, on all these different green energy projects. A lot of that is kind of getting pushed the other way. So those projects have been canceled as far as I know. We've also got some unclear points on if whole departments are getting cut as far as what Trump is planning for what's going on next. So I think he's getting some of these different things to go through. Some different things are on hold. And I think a lot of that is in talks to bring the Democrats back to the table to basically sign our deal, or we're going to keep pushing things further into our favor. There's a lot going on there. Generally speaking, being in DC area my whole life, it shuts down for a couple days. Someone caves, they sign it. But this one looks like there's definitely more of a standoff feel and a lot more uncertainty as to who's going to break first. I mean, it's just that's how it goes. I know we're kind of locking horns on this thing, but it is really an issue out there as to what happens for all these people that are out of work right now. Generally speaking, I'm on the side that, hey, they're going to go back to work. They're all going to be getting their paychecks. But I don't know if that is actually the case this time. And what we do going forward, are these people going to get their jobs back? And being in Maryland, I mean, most of the people nearby, a good majority are federal government employees in some capacity, or it affects most households that I know in some way, shape, or form. So generally speaking, I thought it wasn't going to be much of an issue, 24, 48, 72 hours. And hey, we're back to work. People got a couple days off, got some errands done, some chores done around the house. And, we're right back to it. But this time it does feel like there is more of a standoff. So I'm not too certain as to what's going to happen there. I do think that some of these agendas are getting pushed through in an attempt to get, Democrats back to the table, basically sign our deal, or we're just going to keep pushing. And, politics is politics. I normally don't come on here to talk politics, but it does affect our money. And that is definitely a problem. We've got Palantir, right? I will share some different things as we're going through here. We're going to pull up just what Palantir is doing. I'm going to share this first. We will take a look at the fact that Palantir is down big on Friday. A lot of that is to do with some security concerns. And let me go ahead and switch over to this one. We are looking at a Reuters article about an Army contract. So Anduril and Palantir battlefield communication systems are very high risk, a U.S. Army memo says. Summary, Army memo highlights security issues in NGC2 platform. Anduril says memo reflects outdated program state, and Palantir drops 7% on Friday. I kind of talked about this, guys. I said a lot of things had to go really perfectly for Palantir to still be valued at this monstrosity PE valuation that it's been at, right? I mean, so the fact that things have been going so well for them, I've been saying for a while that we cannot just continue to sustain a 621 times PE over the trailing 12 months. It just simply doesn't work. So any little hiccup, any little miss, rule of 40, the growth margin or the margins, everything that's there, if anything has a hiccup or if there's any headline like this one, we get this big sell-off, right? We get this 7.5% down day. And Palantir even went on to claim that is a false claim and that everything is good to go. But it's still one headline and we're down significantly. Now, we're still up on this thing massively. I'm not saying run for the hills, but I am saying, hey, be mindful as to what's going on there. the fact that a lot of us are up 600, 700% on Palantir, you might want to take a little bit off the table, protect your money. That is more of a trader mindset. I'm not going to say that it's not. I am long this position. I did have some sell off. I am still long. It's my number 2 position, I think, to NVIDIA right now, just for the amount of growth that Palantir has put up. So know that things can go south quickly. Know that 621 times PE over the trailing 12 months, that's what this TTM means right here, that can go sideways really, really fast. It doesn't mean that it is just going to keep on going up. There's no problems. Everything is just all peachy, unicorns and rainbows, whatever you want to call it. It doesn't mean it's just going to keep happening. We've seen this before. We'll see it again. So spot these problems, or do some sort of analysis, whether it's a SWOT analysis or whatever you do, to know the risks of the stocks that you are in or the stocks that you want to be in. And hey, is this a buying opportunity? I don't know that it really is. I think at a 621 times PE, with some different, things out there that could go south, whether it's government spending or departments being cut or whatever else, that could negatively affect Palantir stock. So yes, there is downside. I'm not even so much referring to that when I'm saying, hey, I'm not a net buyer here. I don't know that I'm really looking to sell it, but there are risks present for Palantir stock. First is an NVIDIA that is less to do with, the government. So I think that more AI spend is good for NVIDIA. We are trending up to some of these all-time highs. We did give a little bit back on Friday, not much here. We're looking at 0.67% down. The high price was at 191.05 on the second. So that would have been Thursday, so the day prior. We are looking at 2 different stocks here. One, NVIDIA, I would be a buyer. Do I like buying this at a high? Not so much, but I like buying NVIDIA at a high right now for the place that they're in versus Palantir with the place that they're in. Well, one, yes, we have upside. I see what the analysts say. I'm not even talking about that. I'm looking at evaluation. This is on a trailing 12 months. It is a 53 times. That is very high. I'm not going to say that it's not, but if we get down to the Refinitiv article, we can see going forward a forward PE of a 33. That is a lot more palatable to me than a 621 or whatever Palantir's forward PE is. So 5-year return of 1,300%, not too bad right there. And by that, I'm being sarcastic. That is fantastic. I will take that time and time again. And I know Palantir's done great numbers as well. But we are looking at the earnings going up yearly, quarterly. We are looking at revenue going up 58% for 2026, and then another, 53-ish percent by the end of 2027. These are cumulative here. That is what I'm looking at. So these are added together. By the end of 2027, we're looking at 111% of revenue growth. So I am very bullish on NVIDIA and where it goes from here. Palantir, I think they have some threats that we are looking at right now. So I am being mindful of that. Am I running and selling it? Not at the moment. Would I potentially do that? Possibly, right? We got to see where this thing goes. Maybe I set some stop losses. Maybe we write some covered calls. If it goes back up above 180, maybe we do some different things there. Netflix. Let's get back to Netflix. Let's take a look at this one. Here we go. Elon Musk comes out and calls for users to cancel subscriptions on Netflix, citing some transgender characters in some different kids shows, and the fact that he feels like they are kind of pushing transgender ideas onto the youth audience, and he is not about that. So he is saying to boycott the streaming giant. They were down this week. We've got about 0.79 on Friday. I think they were down around 5%. 5% over the 5-day trading period. So yes, that is a concern, right? We are looking at other people calling out what they are doing and how they're doing it, and that can be a sell-off potential in something like Netflix. Do I think it has staying power? No. I really do not. I don't think that this is going to be a long-term thing where Elon Musk is going to keep calling them out until it's done. I think he's going to make the point And then I think he's going to be on to the next thing. I think he's going to be talking about the government or Trump or going to space or whatever else that is top of mind for Elon at that time. So could it be a buying opportunity? Well, then we'd have to dive into the numbers on that. And I think that's something that we should probably take a look at real quick. I haven't been buying Netflix in forever. I think I traded it years ago. Yeah, I will go ahead and share this one. We're looking back at Netflix. We're sitting at 1153. The high was back in June on the 30th at 1341. PE trailing 12 months is a 49. What do we have here? We've got Refinitiv. Let's go ahead and share this. We will share this one instead. So forward PE is a 40. Doesn't seem that crazy. 5-year return, nothing like what NVIDIA's was, or Palantir's was for that matter, at 131. What do we have going forward? This is going to be the point of when does it get into a buy territory where we think we want to actually pick this thing up. So 16%, a lot of these numbers were probably in before Elon said anything. So these people are probably going to come out and set some lower price targets if this thing gets low enough. We have this weird spike in earnings. Overall, year over year, we look good. I don't know if we just tend to have a weaker winter for Netflix, and maybe spring and summer is stronger. I would think it would be the opposite, as people are kind of cooped up indoors. Maybe they would be turning the streaming back on. Maybe they'd be watching more movies or more shows, and we're a little bit busier in the summer. So I would think that this would be inverse, but overall, year over year, we look fine. It just kind of is weird that we were low last December quarter. I guess that would be trailing looking as well. So maybe these were I don't know. Maybe I'd have to take a look at that a little bit further. But annual revenue increasing, nothing like what NVIDIA's is, right? The revenue is 15% and then 30%, so about 15% per year. I like that. It's stable. But what happens if this thing does sell off? So we are at a bit of a premium on forward PE and trailing PE and price to sales. Nothing there is telling me we've got to buy this thing where we are right now. Yes, we're getting, double-digit revenue growth, but that isn't, drop everything and buy Netflix right now. Price to sales is high. Forward PE is high. Forward PEG ratio is lower than the S&P, but higher than their 5-year average. So I'm talking a 1.7 average for Netflix. We're currently at a 1.8, and the S&P 500 being at a 1.9. We're looking over here. Right. So the forward PEG ratio basically tells me, is this worth buying at this point in time with the price earnings multiple that we're trading at over the 5-year forecasted growth rate? So nothing here is telling me that I have to buy Netflix at this given point in time. So I'm not rushing out to buy this thing, but maybe there's a point if this thing does come down significantly. Maybe if we got this forward PE down to like a 30, maybe that's when we start buying this thing, and then we start to see how bad it gets, and if this Elon Musk thing has any legs, if it really stays on that path of, yes, we're going to keep selling this thing off until Netflix is cheap enough to buy it. Right now, I don't see it as a buy, but I did want to bring up the fact that Elon's target currently is Netflix over transgender agendas. So there's that. We've got DraftKings. We've got some competition out there with DraftKings. So I do want to take a look real quick over here. And I didn't do a whole heck of a lot of homework on DraftKings, but I did read a couple headlines here. So I do want to cover this. We're at 35.70, which, man, this thing was in the mid 40s like no time ago. So let me go ahead and see if I can't share this one. We are going to pull up DraftKings right there, and we are looking at a year to date, right? So we did spike up to around 53. We were trading in the mid 40s, and then we just kind of hit this cliff, right? And this should have been the quarter where a lot of advertising was coming back, a lot more sports is rolling back in. We are getting this competition from, I forget if it was another casino or what's going on there. But we've got pressured by new parlay competition. That was exactly it. So if I go ahead and open this up, we've got DraftKings earnings could be pressured by new competition from prediction markets. Deutsche Bank analyst Steve Pizzella says. Prediction markets operator Kalshi new same-game parlay feature creates new competition and high-margin business for online sports betting platforms. Them and FanDuel are kind of on the chopping block right now. DraftKings stock dropped 17% since Kalshi launched its parlay product during Monday Night Football. FanDuel parent Flutter has shed 12%. So DraftKings taking a little bit more on this one. FanDuel, I believe, operates more. They have more operations in Europe, I believe, is the case there. So DraftKings is probably more directly affected, and FanDuel probably has a little bit more diversification for Europe market, so they aren't losing as much. However, this is definitely something you need to know if you've been in DraftKings, if you were thinking about it, and where we go from here. I don't even know who Kalshi is, or if I'm even saying it remotely right. So if you know a little bit more about it, or if you're looking to get into this position, it's definitely something to take a look at, and why DraftKings is down 17%. We could do the whole walkthrough as to whether or not this stock could be purchased here. Maybe I'll take a quick look. I don't want to leave you guys hanging as to what is going on with DraftKings, and then potentially what happens going forward, right? So we don't really know what is going to be the outcome. Are these numbers that DraftKings has been turning in, are they accurate now, or are they going to be selling off more due to the fact that Kalshi or whoever is coming into the market and they're essentially trying to take market share? So let's get down to the numbers I like to look at. We've got 0 upgrades, 0 downgrades. The price target's about 52% higher. That will probably come down as some market disruptors come in and kind of take some of that market share, or at least make the threat of taking market share. Again, we've got our earnings coming down in the September quarter, and then we are looking to be up by the end of the year in the December quarter. So earnings across the board looking like we're in a decent trajectory. We're going from negative in 2024 back to positive numbers for 2025, and then into the dollar and potentially $1.25 of earnings positive for 2026, which is nice to see. Annual revenues, 32%, 58%. That's better than what we were looking at last. Netflix, that was 15 and 30. Still under NVIDIA, right? So I'm still bullish on NVIDIA for the fact that they're the leader. It's very hard to dethrone them. And, they just keep on printing money. It is insane. But I digress. We go back here. We are at a discount on forward PE around 46%. I see why the price targets are that much higher, being that we're trading that much cheaper. We are at a price to sales discount at a 3.5 versus a 7.1 in years past. We are looking at forward PE 44 versus a 5-year average of an 81. No 5-year growth rate, so I don't have a forward peg number for you currently. But overall, if they can keep that growth rate, if they can keep the revenues coming in, I think they're in an okay place, but they do have some competition, and hopefully we get some more states legalizing sports betting for them to take advantage of. And I know some people are going to say this is a sin stock. I think all of these are sin stocks in some way, shape, or form. Someone is getting raked over the coals by one of these companies, whether or not it's through having, food that is, full of filler and dyes and everything else. Okay, historically speaking, it was, tobacco stocks, casino stocks. There's definitely a lot of pharmaceutical stocks that would probably be brought into that space. Beer, wine, whatever. But someone's getting raked through the coals by any one of these companies at some point in time. So I don't think there's any pure, I don't even know what to call them, pure plays that have done no wrong to anyone in the history of their existence. I just don't think it happens. So I don't necessarily think that the sports betting thing is really all the worst. Some people would disagree with me. I think there's other actors out there that are probably worse, but I think that's to each their own. I know some people don't want to be invested in sin stocks. I get it, but I think none of them are pure, right? That's my 2 cents. We're looking at next. I wanted to pull up Intel, INTC, and this, just a monstrous run that we have seen from Intel. So we are back here, INTC. We're looking at this year-to-date chart. $19 in August. We are at $36 on a stock that is losing money. they are losing $4.75 a share. There is no PE because there's no earnings. We have a dividend. We are getting the government funding this thing, $9 billion. NVIDIA put $5 billion. They are trying to turn this thing around. I do not see it. The options market does not see it. This is getting a lot of FOMO. A lot of people are going into this thing. Well, NVIDIA is going in. The government's going in. It's not going to fail. I don't think that's necessarily the case. I think they have a lot of room to go down, right? We're looking at about 28% of downside. We're looking at a stock that has been propped up by the government and NVIDIA. I don't know that they've done anything where I'm thinking I want to buy these, these stocks. I don't necessarily want to chase this thing. I see more downside. Could they turn things around? Certainly. I don't think that they couldn't, but I think that it is not my best play. In a market with AMD and NVIDIA, I'd much rather be in one of those two. I'd rather have TSMC. I'd rather have AVGO. I know they're not exactly direct competitors, but I would rather be in other places. Micron keeps running for whatever reason. I'm not sure, but that demand there is insane. And that one, man, that one's had more of a gain than Intel, but it's quiet. It's very quiet out there for people that are in Micron. And, Intel's had about $15-16 billion invested into them in the last month. And here we are with Micron. If we look at this chart, at 187, which it just blows my mind. It blows my mind, guys. I don't know how this thing has done this. This is just supposed to be your generic commodity chip maker. We were at, where am I on this chart? We were at $79 in April, $65 at the beginning of April. We've tripled in 6 months on a commodity chip maker, and it just blows my mind. Yes, I was saying to buy it. Yes, I was saying get in it, sub 100. I've done that. I wrote my covered calls at 115 thinking this thing can't go to 140. It just can't do it. And not in this short of time, right? And now in September it was at 140 and now we're at 187 3 weeks later. It just does not make sense to me. I know people are probably still bullish. It might even still have some upside left, 5%. I don't know how they just keep going up. It doesn't make sense to me. I'm in it. I've made some money on it. I'll probably sell this covered call as a gain, but I'm probably leaving about $5,000 on the table by doing that right now. My 140 call, if I just held the shares, it would have been worth $18,783. But right now, I'm going to be selling them at $14,000. So you can do the math there. Wasn't my best play. I did okay. I still have half my shares, which are still going to be valued at 187, and I don't have a covered call written on those. I did buy a little bit in the 140, 150 range as this thing kept going, and it is what it is, right? I'm still doing okay on those. I just did not see this thing going to 190, and it does blow my mind. So we've got a lot of different things here, right? We've been talking about the stocks that we're in, the stocks that continue to run, the threats that we have on companies that are linked to the government right now, what Trump might be doing, what Palantir is facing as far as their communication systems, Anduril, their high risk with the Army. We've got a lot going on there. We've got Netflix kind of coming after, or Musk going after Netflix. Netflix dropping, not necessarily a buy territory. We're looking at, I haven't pulled this one up in a while. Let's go to our Webull account, right? This is what I am buying that we've been looking at for the investing challenge. This is our positions. We've got a lot of stocks that have done really well. We got Broadcom up 483%. Vanguard S&P 500 ETF up 76%. The SPYG, which is the growth. So you're thinking more tech heavy stocks. We're up 93% there. Verizon's up, Deere's up, Gladstone, Enphase down. Capital One up 117%. PayPal, a lot more interest into PayPal at 14% right now. Exxon up. What other things we got? Albemarle down. I still think that this could do well. There has been this resurgence in lithium stocks and battery stocks that we've been seeing lately. JP Morgan up 100%. Bristol Myers, I still think the pipeline is solid there, and I don't know why this thing doesn't move. Adobe, we bought this thing probably way too expensive. Taiwan Semi, right? I said that one, 151%. SoundHound Guys, we were buying that at like $5, and it is currently at I want to say it's, how do I do this? Yeah, at 17.85. That's fantastic. Walgreens went private, so that money is not there. Rio Tinto, not much there, only 2%. So a lot of different things here that have done really, really well for us. The overall account, got 3.5, 4 years ago at this point. We are seeing some more stocks that are going in our favor, which I am definitely happy to see, is one that I was kind of pounding the table on, which was Eli Lilly. This thing got down to what, 650, and I said this thing needs to be purchased. 650 on Eli Lilly does not make any sense. A couple months later, we're at 837. We still have some upside here. I'm not as keen to buy it right now, but when this thing dropped down here, oh yeah, we were buying. We were buying the beginning of August, and now we're up roughly 200 points in 2 months. I will take that as well. I was buying AMPX, another battery play. I was buying that one. That has done pretty well. I was buying D-Pro. I was talking small caps a couple weeks back. Dragonfly. This thing has done fantastic. I think I was buying this at like $5, and this thing was just cranking. Yeah, we were buying this at $5. About a month ago, sub 5 a month ago, doubled up because of some of those government contracts where they are spacing out the categorization and basically making these things expendable. So we're buying them knowing they're going to get destroyed, and we're buying them again. So it's almost like buying ammunition rather than buying an aircraft. That was the delineation, and one of the things that made a lot of the drone stocks go through the roof, right? So definitely some things there that were going well. Yeah. So those are just some of the small caps that I was looking at. This thing's only valued at 230 million. Probably similar for AMPX, a smaller market cap. The things that don't get talked about as much, 1.6 billion. That's decent. It's probably 6 times what D-Pro is. But both of them have done pretty well here in the last month or two. So those are doing well. What was that other one we were looking at? That's pharmaceutical play, MDCX. That one my dad kind of put us on to. This one, year to date, I think we were buying this at 2. I bought it at 2 at the beginning of September, and we're up to like 250. So 25% return there. I'll take that as well. Another small 51 million market cap. So a lot of different things that we're looking at that are small caps, trying to find some value, trying to find some upside. So we've got that. Investing challenge: Nvidia, Tesla, Meta, Amazon, Lilly, NextEra, CrowdStrike, Costco, Bank of America, AMD, Bitcoin. I like Bitcoin right now. I'm liking the setup, the devalued dollar. Eric Trump coming out and saying, hey, I think that Bitcoin's going to be at $1 million per coin. I forget the timeline that he says, but man, Bitcoin is probably going to be on a tear here. I do think that Bitcoin is buyable right now. Now, do I want to go ahead and buy some in this account? IBIT, we've been looking at that one for a while. There are some expense ratios, expenses on this because it is an ETF, and it is a higher cost to have iShares manage your Bitcoin position. So I do have some of this. I like to hold my coins myself in crypto.com. I do have links for that in the description. If I was buying one of these right now, I'm not so keen on buying Lilly right now. Amazon does make sense to me. Tesla has been on a bit of a run and probably getting a little bit far out right now at a 242. Bank of America makes some sense. With rates coming down, we might get some more lending activity, but probably not so much upside after the year that they've had. PE's at 15. I'd probably like to get a bank stock a little bit lower than this, but 9.5%. I really still like buying some of these healthcare names. Lilly isn't the one of them, though. Humana was up like 10%. Salesforce probably has some upside. I'm just thinking of things that I want to buy right now. I still want to be building up my Salesforce position with about 40% of upside. But if I am being strict to the names in this year's investing challenge names, we're not doing the vote anymore. We're looking at these 12 names and what do I want to buy at any specific point in time over the course of the year. So look at it like dollar cost averaging into any one of these stocks throughout the year. Amazon makes sense, decent upside, a lot of different things going well for them. NextEra, probably not the most amount of upside. And do I think we need to add that right now? Costco, we just added. We got some decent upside on Costco. I do like this here, except for the fact that we just bought it. Meta, I'm not too sure that we want to get into that. Maybe we do. I was just thinking of the fact that we were at 400. We've almost doubled, but now we're looking at 23% upside there. Let's look at what the actual story here is and see if we can't get any kind of update on. Sorry, let's go back to the snapshot. Let's take a look at what Refinitiv has to say, and we will go from there. I think if they say that the price is fair, let's go ahead and pull this over. Let's take a look at what Meta is doing. We're in a buy range, 180% over 5 years. Sorry if this is too fast, guys. I'm just trying to get to the numbers that I really want to share with you. 3 upgrades, 17% here. Decent growth. Kind of a rocky quarter here for the September numbers. Then up by the end of the year. Up about $5 on average. I'm looking at a number of 23 for 2024, and I'm looking at 28.21 as the average for 25. And then we're kind of plateauing for 2026. We're only going up about $1.60. Pretty strong on the buy sell. We've got 61 ratings of buy or higher, 7 holds, 1 sell. Revenue 19% for 2025, increasing 38% by the end of 26. We've got nice dividend growth because they weren't paying a dividend years prior. We've got 14% premium on forward PE, which is at a 25. So amongst other NASDAQ stocks, cheaper, lower than Netflix, and lower than NVIDIA, right? We've got PEG ratio at a 2.0. The 5-year average is a 1.6. So a little bit high. Price to sales is high. Trailing PE is a slight high. I'm not too sure as to where we're getting all these buy ratings coming in from. The numbers don't really have me so inclined to buy this. I feel like I need to do a little bit deeper of a dive as to why Meta is getting 20% higher from here when the growth is, the revenue growth is solid. Probably have to take a look at what the actual bottom line's earnings is, but I'm not really seeing the earnings. The earnings for 25 looks like it could go up, but then further out, it doesn't really look like we're getting the earnings for 26. Maybe the 27 numbers are better. But on this PEG ratio, it doesn't really look like we're getting where we want to be on that PEG ratio. A 2 is fine. It's not a 4, but a 1 would be better. So I'm not so inclined to buy this thing. I feel like I like AMD or NVIDIA more. Let's take a look. Let's compare real quick. Let's see what an AMD looks like in this particular space right here. Let's look at Refinitiv. I will share this one for AMD. We're going to take a look on this one, I believe. It just says detailed stock report. Yes, here we are. So let's just get down to the numbers we're looking for. Big discount on forward on AMD. That's already better. I guess we've got 9% upside. Earnings looking better for September, December. Earnings here going from 331 to 390 to 590. So big jump from 25 to 26. That is massive, especially coming off of a 330 in 2024. We go up 60 cents and then $2. That's almost a triple as to what is actually made in 2026. The revenues look pretty awesome, 28%, 55%, not NVIDIA levels. And that might be the problem is they're not quite NVIDIA. 5 years, slight discount on forward. We've got a forward peg of a 1.2 versus a 1.7. Price to sales is right in line. Forward PE is right in line. The trailing PE, I'm not so concerned about as to where it was. I like to look at where it's going, and that's your forward numbers. So forward for the year is right in line. Forward peg is pretty solid. That's almost a third off, roughly. Maybe not a third, but it's significantly off of where it has been in the past. I like AMD here more than I like. What did we just look at? What were we looking at? Was that Amazon? No, that was Meta. So I like AMD more based on valuation. I don't know. Maybe we go ahead and add in AMD. It's been a little bit of time. I don't know necessarily that buying it at close to a high. Are we at the high? We're not quite there yet. We are traded down. We're about 20 points off of the high. We were at a high of 186. We're sitting at 164. It's cooled off a little bit. Numbers for 2026 and that growth earnings over 2025 is massive, right? $2 higher. I think that 2026 could be a huge year for AMD, and we're not paying much for the growth yet that is currently out there. So I'm going to go ahead and give AMD the nod. We are going to be buying AMD for the investing challenge. If you do want to get started, I do have a link in the description for all these different places that I'm showing you, whether it be E-Trade, Crypto.com, or what was the other one? Webull. Sorry, Webull. That is number 3 that we've been looking at today as well. So I got those links. If you're looking to get started, get some free shares for joining Webull, or a bit of a kickback for starting an account on E-Trade or Crypto.com. I would definitely appreciate you guys using my link. And with that being said, that's all the time that I got for you guys today. Thank you very much for coming by, talking some stocks with me. And hopefully we've got a solid week out there. And the government shutdown gets ended soon. So hopefully, if you are in those crosshairs, hopefully you've got a solid return to work, and that paycheck keeps rolling in for you guys. So thanks very much for stopping by. Please make sure you like, subscribe, and share. I'll catch you in the next one. Take care.